Hi, this was a budget as if it was dictated by the FIIs. I think the FM has gone out of its way to ensure that all the thorns in their way, the path have been weeded out. Take for instance that the FIs felt that there would be taxed in India. He has made it clear that you will not be taxed in India. 2. GAR has been postponed by 2 years. Thirdly, alternate investment funds FIs can invest, and more importantly, there will now be a composite permission, so a separate FIA permission will not be required, or FDI will not be required. So both FDI and FIA positions will be now merged, and there will be a single percentage that they have to now look at. I think FM knows very clearly that FIs are the only ones who invest in large sums in India, and internationally they are on the lookout for good economies that are growing at a good pace. India, fortunately, as the survey also told us, that will grow somewhere around 8.1 to 8.5% in the next fiscal, and FM wants to ensure that we make the best out of it. So he has put his best foot forward. I think with this, a lot of FI flows will flow into India, and to that extent, India is in fact the largest economy, growing at a 8% plus rate next year, and a lot of FI money will now flow in. To that extent, I must say this budget has succeeded in attracting FIIs. The second thing I like about this budget is that there is clarity on taxation. Not only clarity for what is going to happen next year, but also because of the fact that he has given out a 4-year plan to bring down the tax rate from the current 33 to around 25%. I think this thing was missing, and I think with a clear tax rate, it would be possible for domestic corporates and international players to essentially come out and plan their investments in India. The third good point about this budget is the allocation to infrastructure. Around 70,000 crores more have been allocated to infrastructure sector in the current budget. Road, rail and irrigation projects have been allowed to raise tax-free bonds from the public, which they eventually will as per their needs. The third part is the government will contribute around 20,000 crores to a national infrastructure and investment fund, which will then invest into organizations like NHB and IRFC, which in turn can fund more projects in infrastructure. This 20,000 crores per annum which the government will give can essentially translate into something like 2 lakh crores on the ground in terms of financial assistance. This budget also deals with two institutions. One institution is strengthened, another is slightly weakened. The institution which is strengthened by the current budget is Securities and Exchange Board of India, where FMC has been merged. So Securities and Exchange Board of India will now be the super regulator in the marketplace, looking after both commodities and equities business. The Reserve Bank of India appears to be a case where some powers will now be looked after by a new agency, which the government will float to look after the debt which the government owns, both domestic and international. This work was earlier looked after by the RBI. To that extent, I think the wings of the RBI would be clipped. The last point which I liked about the budget is that the importance of gold assets that we have in India. I think the FM clearly understands that India has close to around 50,000 tons of gold that we have in India, and around 8,000 tons to 1,000 tons we import every year. So that gold lies without any kind of making any economic contribution to the country as jewelry or in the lockers of people. In order to make that gold come out of the closets and the houses and the households, the government will come out with a scheme in which when you tender those gold to the government, it will give you interest on that, so you can earn money on that. Also, that gold can be used for loan purposes as well. So to that extent, I think it will put an asset which is not actually working for the economy to be able to contribute positively for the households and to the national economy as well. Now the budget has been presented, it's been digested by the markets for the time being. More fine print will come out on Monday and other days, and people will then trade on the basis of whatever the budget has said. More important will be the action to watch how the FIs behave on Monday. But let it be very clear that budget is only one of the events that impacts our markets. There are other international events which will keep on unfolding themselves every day, and we'll be reacting to them each day. What is more important in the current budget perspective was what the FM did not do. Essentially, one of the rumors that was floating before the budget was announced was the fact that he could possibly change the long-term capital gains tax exemption rules. Currently in the capital market, if you hold on to stocks for around 1 year, then whatever gains or whatever profit that you make is tax-free. You don't pay any tax on that. The proposal, what some channels did say, was to increase this long-term from 1 year to 3 years. Had that happened, the markets would have closed on a lower circuit. I think this is one area where investors will realize that more important than what the FM has done was to ensure what he didn't do. So from that perspective, the markets are very happy with Mr. Jaitley's second attempt. This was a full year, a full budget. He had all the time to prepare. Although there will be many complaints, but overall the markets have no complaints whatsoever, because markets have ultimately closed on a positive note.